Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. Tuesday, and we do have some big retail sales numbers coming up here in about 4 minutes. Expected retail sales month over month, spot 3 versus a previous reading of spot 6. Although I was going to say I have it on good sources, but you know, all of these analysts have spotty records. But the analysts that I follow, that I trust the most, are actually saying that it will be higher than spot 3. So let's come over and look at the charts, see where we're at. It looks like we have a rollover in oil today. Let's switch that over. Okay, so yesterday, you know, there was a little bit of, you know, fight, but they pushed down and then didn't really go much of anywhere. And now this morning they're pushing down again. I'm kind of getting hints of like term premium stuff again, and liquidity is not very good. We're only got about 2,000 contracts out there, and when we're moving, I'm not seeing as much volume. So that's making things very slippery and confusing again, and we're having moves that are like big moves on no volume and no correlations. So that makes trading difficult for us, but it also means that there is lots of opportunity to make or lose money. Here we got the S&P 500 down a little bit overnight, but they had a pretty good run off of the open yesterday in the equity markets. Oil, we got the rollover gap, but the rollover is a little bit lower here. Gold and silver actually kind of moving to the upside again. And copper, another little down move to new lows in copper. Bitcoin, recall that in Bitcoin there was the fake headline, but you know, they managed an okay win despite the fake headline. Also in the Japanese yen, we need to highlight here, didn't really affect the treasuries as much, but there was a story in Japan. I don't, you know, the news squawk mentioned it, but didn't really say what the news story was. So I don't know what exactly it was they said to cause that, but stuff is going on in the Japanese yen. So just make note of that. Trying to support the currency, I guess. So that's where we're at. And again, in about a minute here, we're going to get US retail sales. So hopefully we can get some good action off of that later in the week, because I'm going to be getting a colonoscopy this week. I'm going to be a little bit less. I won't be putting on as much risk later in the week because of that, because I won't be my best. So let's make sure that we got a new squawk going here. Four, 7, 6. So I guess if I was going to take a risk trade, I would sell treasury here, right? So let's see what happens. Okay, they are moving down a little bit. Oh yeah. Oh yeah. Nope. Too slow. Hey, did we call that or what? Yeah, I thought so. So they're really forcing you to pay up in the micros. Look at the people hitting into 479. I don't have the guts to hit that. Maybe at 22, but the way the volume's going off right there has me a little bit nervous about a bit of a pullback. If I had been able to get filled at 477, that would have been awesome, but... Okay, so to review, U.S. retail sales month-over-month, spot 7 versus a previous reading of spot 6 and an expected reading of spot 3. And core retail sales was spot 6 versus the expectation of spot 2 and a previous reading of spot 6. So while the consensus estimate was expecting a significant slowdown in retail sales, the numbers are that things didn't slow down at all. And for the treasuries, that is bad news indeed. And you can see the ZB pushing down there, and the spread in the micros coming in a little bit now. Never bet against the U.S. economy. Well, I tell you what. I think one of the mistakes that analysts were making was that they were anticipating the resumption of student loans to decrease some retail spending. But I think that, one, that's not going to have as much of an effect until next month. Two, households still have a lot of room to take on credit. And three, they have not burned down their savings as much as they think. And there was some of these people that were doing these estimates were looking at it, and they're saying, actually, now we estimate that households won't run out of savings until like mid next year. So they've added another 9 months to like what they think the retail spender has. That's a big shift, right? So rates did move a little bit higher here because the 30-year is pushing. We're still pretty close to where we were, though. Seeing some big spoofs trying to chase it as it ticked down. Might be another little leg in here. I probably could have hit that as she goes. 4.8, huh? Really want 477? I really want to take a trade, but I just didn't like the way that what the liquidity was looking like. So now that the spread has come back in, I suppose that we could try taking trades, but I don't know if 4.8 is really a very good spot. So I think that what we got to do is, or what I've got to do at least, if I was over here in the full treasuries, I could maybe still try and hit it as she goes, because, over here, if I take one tick, that's fine. Over here, that's a little bit more fraud. Look at that. The liquidity isn't pulling away, but they aren't stacking at all, right? So they're just pushing through this. Maybe there might be a little bit of support at between 18 and 17. I bet you that 18 doesn't just pull away. If they trade it at all. So Bank of America is having their conference call right now, and Moynihan is saying he sees the retail spending slowing down. It's like, okay, that's helpful. I gotta say it again. Kudos to the Goldman Sachs and Bank of America analysts for calling retail sales perfectly. Goldman was saying spot 6, spot 7. They hit it on the nose. Good job, guys. Those are my boys. That's my boys. 4-8 still. Well, a little bit at 19. Wouldn't be surprised if I could get one from 19 to 19.5. Let's, I'm not going to do it. I'm just going to, like, pretend. Oh, okay, I wouldn't have gotten filled at 19. Never mind. Never mind. Okay, so something I want to note is that the Japanese yen, we look over here to the far left, make that big. Again, there was a big spike on headlines, some job owning over in the Japanese yen overnight. This retail sales is now pushing them back to below where they were, almost to the lows from before that news. That spike down there, I kind of ignore that because that's just like liquidity wasn't there, right? So on one hand, that could act as support and could cause the treasuries to have a little bit of time getting lower. On the other hand, it could push lower and cause a lot of stop outs and some drama. But then the other thing is that if we're getting volatility and stuff, one has to wonder about the possibility of the currency intervention in the Japanese yen coming in again. Dollar above one. Why don't I have it above 108? I have it 106. Then we have to talk about the banking crisis again. Well, yeah, with interest rates at 4.8, I definitely think that you do have to worry about some regional banks having problems. In fact, let's come over here and pull up TradingView and look at can we see the KRE overnight? I think we can. And there's the treasuries fall back to lows. It's not really showing me. The KRE did well yesterday. That was the thing, is like the treasuries went lower, but the KRE did not. So it was like, it wasn't even correlated with the regional banks. So far, my reading is that the regional banks have not been a factor in the order flows that we've seen this week. But there is definitely going to be a point where it gets there, right? Oh, and should note that the 10-year did make a new low there by a tad. See, if we had taken 4.8, we'd be just shy of 10 ticks, which is kind of like where I always get stuck. That's kind of why I didn't do it, right? Yeah, there you go. Back to 19. Actually, that one makes me want to try this little one ticker again. Typically, you'd rather get filled at 18.5 and get out at 19, but I think that there's been enough back and forth at 19.5 that we should be able to get away with this. Let's see. That's good. Well, that was about the best uptick that you could get, but didn't follow through. Could scratch it there off of that. Iceberg at 19, that's good. Cool. Worked. It wasn't like the perfect trade, but it was pretty good. Didn't go against us. It didn't get any MAE. The government is currently spending more to pay interest on its $33 trillion national debt than it does on national defense per the... Yes. Well, I saw that headline like last week, I think. I think the issue on that one is that there are many people that will be out there telling us that, like, that's not actually a big deal. But then it's like, okay, but at which point is it a big deal? Like, nobody can really say. I think it's a problem when your national debt is larger than your GDP, right? That just reminds me about the whole discussion we had yesterday about, is Israel waiting for there to be a Speaker of the House so that they can get some funding before they go and do things? Because the headline last night was Israeli media was reporting that they hadn't gone into Gaza yet because they were afraid that Hezbollah was going to come in from the north. And that Iran was like saber rattling, saying that if they went in, that they would get involved. So, like, nothing's happened over there yet. Oh, hey, YouTube picked up on that I have tight hamstrings. Cool. I'll watch that video later. Okay, so Zero Hedge has their story out. Let's read it. Despite reports of plunges in card spending from Citi and Barclays, a huge downward revision in U.S. consumption per GDP expectations were for a modest rise in retail sales, nominal, remember, this morning, with the omniscient Bank of America forecasting a slightly stronger than consensus rise for headline sales, and Goldman, and even more exuberant, reflecting increases in auto, gasoline, and restaurant sales. And Goldman was right with a huge beat. Headline retail sales soared spot 7% month over month versus an expected spot 3%. The previous 2 months were also revised higher, rising for 6 straight months, lifting retail sales up 3.8% year over year. Retail sales soared across the board, with core exploding higher, and the control group also jumped spot 6% month over month. Under the hood, there is barely any red, with miscellaneous and store retailers soaring after miscellaneous store retailers plunged last month. This is certainly not the, quote, slowdown the Fed would have hoped to see. Canadian dollars really dumped off of their CPI. Well, the dollar rose here off of those numbers from 105.84 to 106.17. And again, the treasuries have risen a good 3 to 4 basis points here after having already been up overnight. right? Because we were at like 3.7 yesterday, so we're basically like 10 basis points higher today. Now, there is a liquidity hole around 19. They do seem to be having a little bit of a problem. Like, they're not getting more sell volume following through. It's rebalancing. It's not really giving me any good spots. I mean, I took a tick. I was able to take a tick, but... You know what's another thing about Israel? I want to note really quickly, and I don't know if we have to comment on this too much, but one of the headlines that I saw yesterday was that Zelensky wanted to make a visit to Israel in, quote, solidarity, and Netanyahu said now is not the time, and meanwhile, Biden is to make a solidarity visit to Israel on Wednesday. So they told Zelensky no, but Biden yes. It's actually hilarious. Well, it puts that whole focus on that at this point, Ukraine and Israel are kind of fighting for Western funding with each other now, right? Heavy offers in ZF, yeah. This is a good point. But you know what, Octavius? I'm focused more on with the liquidity today is that there's only 2,000 contracts per price in ZN. So we're back to bad liquidity again. Remember, at the beginning of this contract, we thought, oh, okay, there's more liquidity in this contract and maybe things will go back to normal. And then as this contract has gone on, the liquidity has decreased again. And meanwhile, we got this spread, this couple of different dynamics going on, maybe pushing the treasuries higher. Or sorry, the yields higher. Treasuries down. It's like they don't want to touch it. And I think one of the things that has been messing me up lately is that even when the liquidity appears to be there, this can move like 4 or 5 ticks on nothing, right? You'll just see all of the bids cancel and they'll just plow right through it. And usually, if I see, we're just sitting here and then all of a sudden we move down 5 ticks and I'm kind of like, well, that doesn't make much sense. Why was it that all of a sudden they were able to break through there? I'm usually thinking like, there must be a correlation, like the Japanese yen moved or the dollar moved, and I'm not seeing clear evidence of that in these instances. Sometimes they're correlated, but it's kind of in a way that I'm not 100% sure that it was actually the dollar that moved and not the dollar reacting to the treasury. And so I think that there's a possibility that some of these moves are just happening on no liquidity, that there are people out there, they need to sell, and when they need to sell, the liquidity is not there. That's a big problem, right? I mean, that's a big problem for the way that I trade, but it's also a big problem for if you want interest rates to stay low. Because here we are concerned about that the government spends more on paying interest than anything. And how are rates going to come back down? Yeah, under those dynamics, right? They can't unless you have like a really bad recession. But Yellen said the U.S. can afford 2 wars. Yeah. That's why I keep saying it's just like, I mean, they keep telling us it's not a big deal, but at what point does it become a big deal? Nobody can answer that. Nobody can answer that. And meanwhile, there's... I think smart observers have reason to be, are right to be at least concerned when you can't answer those kinds of questions, Like, I'm sure if Jeffrey Gundlach was here, that he would, he would be asking that question. The Bond King, for if you're not, for the uninitiated. That reminds me, we didn't talk about it too much, but did you see a couple of weeks ago where the guy from Pimco was having like a pissing match with Jeffrey, and Jeffrey took the high road? I love that guy. Jeffrey is one of my favorite people in the financial space. Nothing's a big deal. Everything will be fine. Yeah, it is, because it's one of those situations where if there was a problem, they're not going to say nothing, right? Because if they did say that there was a problem, the market would flip. I don't know. It also makes me think about what Donald Trump did during his time, because I think that there was a lot of little executive decisions that the Trump administration made that, in retrospect, were really great policy and were actually quite brilliant. For instance, getting the whole thing with Egypt and Israel started. I think that was Kushner's job. Good job, man. It was a good thing, even though it hasn't completed yet. But it was a good policy. The way that they dealt with the border, of course, they made their mistake in the beginning, but then because they made the mistake, they came up with a better policy, and I think that policy worked. It's really sad that Joe Biden threw it in the trash, but now Joe's kind of starting to go back towards it. Was a good policy. But one that kind of bothers me now is thinking about the whole trade war thing and stuff. Because basically what happened was Trump comes in office, does the tax cuts, the economy is just roaring, it's looking great. And he says, okay, now I have built myself up a cash position that I can go out and take risk with. And so then he starts taking risk, fighting with China, trade wars, all of this sort of stuff, right? And didn't really pay off. I don't know if too much harm was done in the long run, but it didn't pay off. And then COVID came along. And then we had to spend a ton of money for COVID. So it was like we used the cash on risk on trying to resolve the trade war thing. And then we had to spend insane amounts on COVID and push the debt super high. And if we hadn't have done that, we could have just completely absorbed the impact of COVID, perhaps. That, in retrospect, kind of bothers me a little bit. It's just like, that's the risk when you play that game. Like, you make a bunch of cash and then you take a risk with it. Okay, but then what if, like, a real problem comes along? Are you actually going to be able to weather that storm? And if it's like your personal finances or if it's your company, you might be able to get away with that. But can we actually afford to take those kinds of risks as a society? At the time, I was all for it. And now I'm not sure. I feel like that we don't take enough risks as a society as a whole. But I'm not sure that particular risk was the right call. Anyways, just thoughts. I was thinking a lot this morning about like level 3 investing, societal level investing. What are the investments that we make? Right? Because I think a lot of people, the virtue signaling thing, like people want to think of themselves as good, and they want to appear to other people as good. And so we make all of these actions, the virtue signaling, pushing certain policies and everything to try and appeal to that I would almost say it's like a narcissistic need to be perceived as the good guy. And I don't think that they're making those kinds of decisions from a level 3 investing perspective. Like a level 3 investing perspective being that our goal is to build society and to make life better for the people that will come after us. That's including our children and our children's children and everybody else if you don't have kids. It's important to think of investing on all levels, even if you're only at level 1, which is you're just contributing to your 401k and your IRA. You know, a lot of people will say, oh, well, I'm only doing that, so I don't need to think of level 2 investing, which is like stocks, private equity, real estate. And what we're doing here, I would consider level 2 investing. They say, well, I'm not going to day trade, so I don't need to think about those things. But there's stuff that you learn when you think about those. It's thinking about those things that gets you to level 2. So you're building that model, and that model in your mind when you're learning about and thinking about those things, that model is what allows you to make the right decisions to get to that next level, because now you have the framework to understand what's going on and make like those long-term plans. So it's important for us to think about those level 3, those societal level investments as well. This is why, for instance, people's attitudes change so much when they have kids. Because when they have kids, all of a sudden they're thinking about level 3 investing on a much deeper level. And that changes the decisions that they make. Right? So are the decisions that we make, are they because they're really going to be what's going to be best for society and for the people that live in the future? Or is it to appeal to our own sense of narcissism and feel like a good guy? Because I tell you what, envy usually does not get people anywhere. Okay? And envy does not make the future better for everyone. It doesn't. All you do is you're just tearing other people down, and you're not building, right? We need to enable those that haven't had the success to get into level 2 investing yet, right? That's really what we should be thinking about. What are the investments that we're making with our kids? What are we teaching them, etc.? You know, I think one of the things I want to teach my kids is the value of creating things. Not that I think that your career should be in art, but I think that everybody should have an art. I think that creating is an amazing thing. It's almost like a sacred thing. And like the reason that we just don't go around like destroying things is because somebody else made that thing. And we should respect the things that we've created. And, you know, we would like to, in if we can, in some instances, to allow those things that other people built to last forever. You know, sometimes it's appropriate for it to last forever. So we gotta have respect. This seems to be like something that kids these days don't get. They just run around the cities destroying things wanton. They have absolutely no respect for the work that other people have done. And it's like, it's so easy to make things because of the internet and so forth. And so much of what is made is digital that they don't build any respect for them, you know? School doesn't learn you about money, only about how to work. Well, I kind of feel like that school can't. So, okay. This is an argument that is made by a lot of people, especially on the right these days, that I don't completely agree with. You're correct that school doesn't teach you about money. Probably there should be classes about things like how to do your taxes and stuff like that, right? But I think that the reality is that this is not something that public school will ever be effective at teaching you. This is something that you have to teach your kids and that you have to learn yourself. Right? Because a large portion of it is the base values that you have and how that leads to your approach to the world and your model of the world that you can then use to make decisions about things like what risks to take and where to invest and so forth, right? Investing is an art. It shouldn't say that. Investing is not an art. Investing is art. Okay? What is art? Art is a craft. So when you're doing a craft, you're making something, and there's thousands of tiny little decisions that will go into that. Like if I'm making furniture, what tools do I use to make that furniture? What wood do I use? How do I cut it? There's all these tiny decisions about what you're trying to do and what you want that factor into the making of that thing that are just like, you can't even fathom. If you were to keep track of every little decision that had gone into making that piece. You would have like a whole book. It's crazy when you actually like really get down into the detail. That is a craft, right? It's a craft. It takes skill. Not everybody's good at investing. And there's meaning. That's the key thing that kind of sets like a craft apart from art. I can go and I can make a piece of furniture, but if it's not there to speak or say something, if I didn't really actually have meaning behind why I made the piece, then it's not considered art by the highbrow art people, right? The thing that makes it an art is that there's meaning behind it, right? But regardless of how you're investing, there's meaning behind it. The way that you're investing says something about your outlook on the world as to what the world is going to be or what the world should be that are influencing your investment decisions. Investing is art, right? So you can't just go and teach people the mechanics of it and expect them to be good investors, because a large part of the art is what your view of the world is. You see what I'm saying? Yeah, but if someone has to teach you, if you don't learn to learn, then you don't about money. Well, yeah, this is another problem in our society, is that, or at least this is a new problem that I am noticing in Gen Z, is that they are less inclined to learn how to learn. They're less inclined to try and figure things out by themselves. And, that leads to a lot of problems, because like in trading, investing is maybe a little bit of a different thing. But in trading, you're just not going to have success in trading unless you learn how to figure things out. Because an edge means being able to give as an advantage that other people don't have. And for us as retail traders, we can't really have an edge in fast execution, for instance. The algorithms are always going to beat us. So the edge that we have as retail traders is primarily our knowledge. If everybody has that knowledge, it can't be an edge. That means you're going to have to discover knowledge for yourself. You're going to have to discover some of that edge on your own. And if you've never developed the skills, if you've never gone through the process of discovering things like doing your own science, then you're going to be screwed. And that's why you get so many kids coming in. They end up doing the same thing as everybody else and getting nowhere, because they're just trying to copy each other. And there's not actual original thought behind what they're doing. Well, we did push to a new low. It was a little bit sooner than I was anticipating. So now I'm sitting here looking at it being like, well, I really could have taken the 4.8. You're not completely sure what the trend is these days? Well, in treasuries, the trend is down, man. I can tell you that much. The trend is down. I keep seeing a lot of info that suggests that flows should be long, but obviously after a retail sales number like that, I think that the treasuries are only going to sell. The question is, which price do you sell? Because there will be pullbacks. And the thing that keeps happening is because the liquidity is so awful, it's really hard to identify that spot, and it just goes without you. And then if you try and chase it, you risk getting caught on the whip back. Like this move right here. I don't know if I'm seeing it quite yet, but that drop below 16 kind of has me like, if I had somehow gotten 477, for instance, I think that I would maybe be thinking about taking profits here. Takes me so long to confirm that, yeah, I get whipped. Yeah. Well, so John Grady, he had a video out yesterday, and I thought it was interesting because I felt like that the thinking and so forth was much more along the lines of the things that I've been trying to teach people, the things that I felt like the No BS course I didn't really understand well after the No BS course. And my further research, I've kind of been able to learn, and now I'm hearing him talk about those things. Maybe he watches the stream. I can only hope. But because he was saying like, okay, here's a move where we move down, and you're gonna see that these bids just evaporate below the move. You know, there's like 2,000 here, but then it only trades 700, and it does that several prices in a row. And when he says, I took this trade for a couple of different reasons, I'm expecting to see that. I'm anticipating the order flow. He's not saying like, here's the order flow and this is some signal based off. There's all these other reasons why he got in that, and he's predicting order flow, right? And I think that's the real key, is that you have to predict the order flow. You have to say, I'm going to get in. There's going to be other people that are going to sell after me. And this is the way that it's going to play out on the DOM. And you can make a prediction based on, you know, some of the things that you know about the stylized behavior of markets and the current situation and so forth, right? And so if you are trying to trade like a technical analysis form of things, the way that technical analysis works is you're looking for some sort of a signal, right? And the signal is often fuzzy, right? So then the question is, how strong of a signal do I actually need for me to want to get into the trade? And the more confirmation that I wait for, the better a chance I have of that signal working out. But the more it's already moved, and so there's not as much in it for me. And so if you wait, basically what ends up happening is by the time you get the confirmation, it's already too late. The market has already moved too much. You're getting in when everybody else is getting in, and you just end up dumping into the liquidity hole, and it goes nowhere. So you have to be able to predict. The problem is that when the liquidity just evaporates all over the place, it's really, really hard to predict when that's going to happen, right? The best thing that I can do is just, you know, go short and try and hang on. That's always, especially if you're an equities trader, that's one of the things that I've learned that is really valuable. The best trade is usually the first trade. And if you miss the first trade, everything after that is a mess. Everything after that is a mess. If you catch the first trade, if you go short the S&P 500, and it turns into a crazy down day, okay, you can just sit and hold it all day and make mondo money. But if you miss that and you're trying to get in, what you're going to find is like it keeps going lower, but every time I get in, I get into a pullback or I just can't handle the heat. Right? This is the way that the markets go. You want to get in when it's quiet, right? You want to anticipate the flow, get in when it's quiet, and then watch everybody else panic, and then you can cover in the panic. That's why I'm kind of stuck here. Like, okay, I missed the first trade. We can see a pullback. I guess we got 21 at one point. Really hard for me to take a trade off of that. He's still got a lot of market left for us today, but I'm kind of starting to feel the like maybe I don't take any trades this week. Because that was probably my best opportunity. We have tomorrow GDP, so we can maybe mess with that one. Okay, so I think I missed some comments here. Interesting to see if Tesla has to take a beating after the accounts. Oh, yeah, I haven't even been following what the earnings story with Tesla is going into that. Confluence doesn't happen at the same time. I'd rather be sure than take a chance or a guess. Yeah, so the way that Futures Trader 71 says it is that there's like price risk, right? So the earlier that you take the trade, the less price risk you're taking on. And that essentially for what we're doing for trading, intraday trading, you know, you need to take on a certain amount of price risk, or you want to reduce your price risk. So it's a trade-off between price risk and informational risk, right? You know less about what's going to happen because you don't have as much information, so you're not sure, or you're taking less price risk because you're taking it earlier. Interesting how the delta for lots larger than 2. Are you using it, filtering it? Well, they did move lower though now. Like that last sweep down took us down now to negative 20K since the news. This was the thing yesterday that frustrated me, was that price and cumulative delta were not correlated at all. So for filters, I use filters to try and track large orders like these spoofs and stuff. But my observation has been that the vast majority of orders are one lots, and that probably the biggest players are splitting all of their lots. Like they'll come in and they're going to buy 1,000, but it shows up to us as a bunch of, you know, one lots and stuff. So I don't know if like filtering it to 200 really because really what you're doing is if you filter it to 200, you're catching the algorithms that for whatever reason don't care to do those sorts of things, which probably means you're catching like the most passive or the most simple players. So I don't know if how it would help you per se. If it does or not. Well, you're getting a better pullback here, back to 16. So when it broke from 18 to 16, that wasn't so concerning to me. This break from 16 to 14, though, I was kind of like, that happened sooner than I thought it would. I was just thinking about, you know, the treasuries have been selling for a couple of weeks now. And especially in the beginning, it's kind of been like, I don't think I understand this selling. You know? Now I'm looking at it and it's really like, oh, wow. Oh, sorry, we're getting some news here. What's the news that we're getting? Oh, industrial production month over month. Hold on. Then at 7 and 5 minutes, we got Fed's Bowman. Then Goldman Sachs earnings call. Probably need to go and look at that and see. I hadn't seen what Goldman Sachs earnings were yet. Okay. A 0 spot 3 versus an expected 0. Liquidity's back. Okay. Anyways, so when we're getting those things in the treasuries were selling, for whatever reason, they knew that it was a bigger deal than just the headline suggested to me, you know, and I want to know what it was. Like, how did they knew that, you know? I've messed around a lot with filters for, you know, only showing orders of this size. I'm just saying, because the biggest players split all of their lots, I'm not convinced that that kind of filtering is actually that useful. Ultimately, what matters is when you get in, how many orders are behind you and how the liquidity reacts to it, right? So the net, you know, orders are orders and they all have an impact. I'd say they traded a decent amount at 15. Which just kind of says to me the range might be now between, well, I don't know if they can even get back to 19. So let's say between 17 and 12 maybe is where it might languish for the rest of the day. I might try and grab another tick here if I can identify a spot where it seems like there's a 2-tick hole. It sucks. I was thinking, I've just been thinking about it again, the liquidity, because I think about a lot of things, don't I? I haven't been happy with the amount of trading that I've done. You know, I was holding off in the summer, and then I thought that when we got into the fall that I would be more active, and I haven't been. And I'm realizing it's because the liquidity has not been as strong as I thought it was going to be. And it seems like the treasuries continue to sell. And so I'm now making the realization that essentially I'm going to have to accept trading shitty liquidity if I'm going to trade, right? I can't just wait for it to come back. Normally I would, but in this situation, I don't know if that's the way that's going to happen. Wow, they just got slammed down there back to the lows awfully quick. I don't know if there was any headline or reason behind that, but yeah, I didn't see any headlines on that decline. I don't know what that was. Okay, so if I can go back, Amir, one of the things that Amir said is, I think the main problem is poverty. So when you're investing, do you think, like, how do I invest? Do you think, well, I think the main problem is I want to make more money. So how do I make more? You know, how do I make the most money from investing? It's like it's such a big problem. It's the obvious thing that you're trying to accomplish, but it doesn't actually help you devise a strategy, does it? Right? That's why when you're thinking about your societal investments, right? The goal is to make society better for those that come after you. That's what life is all about, my friends. Okay, now that we know that, where are the investments that we can make? Well, we can invest in our children, in our local communities, in the things that we create and put out into the world, right? Now we've kind of built a framework through which our values can kind of show through and we can make decisions, right? Okay, so one of them is the things that are great. I should take great care in the things that I create and put out into the world. If I make a video, I'm not going to just do what everybody else on YouTube is doing and try and come up with what the most clickbaity headline is and make up some story that will keep viewers engaged. Obviously, I want the video to do well, but I'm trying to put something out into the world that's going to help people and that's going to be informative. And if I'm like clickbaiting people, or if the video is all, the whole reason that I'm doing the video is just to have a video out there that does really well, then it's not actually a good investment, is it? Right? Because if I was just going to do the things that people want, I would say, hey, I tried this pattern and it worked out and I made $1 million. That's the video that people are going to click on, right? They're not going to click on the, hey, like, technical analysis doesn't really work and here is like the advanced math behind why, right? But for the people that do click on it, that's going to be valuable information. It's going to help them a lot, right? And so that's how my values correlate into the investment that I make with my YouTube channel, for instance, right? I've been thinking if grabbing a tick on ZB is even possible, because if the sky's the limit with size, you can do 6 rounds. I feel like that if you're gonna scalp for ticks in ZB, you've got to be awfully fast, man. I don't know if a retail trader can really pull off 1 tick over there. It's getting to the point. I mean, like, you can try in ZN. I don't know how successful you'd be with it or not. I can certainly point out some spots where I'm able to get 1 tick pretty easily. But I really have to be selective with them. Barney Hall says, well said, well, thank you. Yeah, knowing where you are in the queue helps. It's true. Yeah, I think that one of the things that has led to the society that we have is that our grandparents and our parents didn't do a very good job of passing these things down to generation to say, you know, I did all of this work for the future of society for you, and so now it's your responsibility to continue them on. Instead, we just told people, be in it for yourself, right? Be in it for that life is about eat, drink, and be merry, for tomorrow we die. So you do whatever it is that feels the best to you at this time. That's what we did. And so now people don't consider those different levels of investment, especially not the societal level of investment. And so the result is you get some people that they become very, very rich, and they do so at the expense of other people. Like if you are an executive and you come in and you enter into a company, and then you basically eviscerate that company to provide more value to the shareholders, right? So yeah, you, the executive, you make a ton of money. Maybe some of the people that got into the stock early on, maybe they make money. But then if the company is eventually ravaged to the point that soon after you're gone, the company ceases to exist anymore, then it wasn't actually a good investment, was it? And these people, they don't care about that sort of thing. All they care about is how much money they make. It's a very selfish thing, and what is it a symptom of? It's people not thinking level 3 investing. They didn't. Oh, they did break a new low by a tick. I was gonna say they haven't completely like fallen through here, but they're sure leaning on it. The 30-year has come back a little bit, but the 10-year, it's like right there on the edge. And I'm kind of wondering if it's just going to break a little bit lower down to like 10. Because, well, I don't know. I remember seeing 18 was one spot where it had pulled back from, right? But I want to be short treasuries really bad, but 4825 doesn't seem like that's it. And I just can't get myself to click it, and yet I can see it like it might just go here. Oh, that was awfully close. It went offer, but only a few contracts hit it at 13 so far. Going back on the subject of level 3 investing, another symptom that I see is people don't want to have kids. The most important level 3 investment that you can make is the decision to have kids and then how you decide to raise them. And a lot of people are just skipping that responsibility altogether. And again, like, that's one of the reasons why people's attitudes change so much when they have kids. I always said that it's like when you get older, people get more conservative as they get older. That's not true. People get more conservative when they have kids. Because a lot of millennials aren't having kids, they're not becoming more conservative as they get older. The left, in my opinion, does not think from a level 3 investing perspective. They try and do, I mean, they will come in and have these ideas of, we want to protect the environment, but they're not doing it from the perspective of what are the things we can do to make the world better for the future, and et cetera, et cetera. They're doing it for their own selfish reasons, to appear virtuous. Because if it's about what do you do to make the world better for the people that come behind us, you're not going to come in with a solution that says, okay, we're having a problem with climate change. What's the solution? I know. Let's limit the movement of people. Let's have less people. Okay. If you're thinking societal level investing, level 3 investing, those are non-starters, right? Because your greatest resource will always be your people. So having less people, that's bad. I mean, you reach an upper limit where it's not responsible for us to have more, but you still just want the population growth to remain consistent, not to decline, which is what's happening in the Western world. And then what happens? You don't have those resources of people. That's your most important resource. Now you're not going to have the things like the innovation and so forth to actually be able to solve some of those problems, like climate change, if you believe that that's the most important problem. You're not going to solve climate change by having less kids, guys. By the time that would even like affect things, already be too late. So what you need to do, we need to have kids, and we need to be raising them right and teaching them how to solve problems so that when they grow up, they can potentially solve that problem. Because it's not going to happen in my generation. Right? That's why thinking level 3 is important, even if you don't have a strong ability to invest on that level yet. Man, this is just not... They pulled back a little bit, but this is just super heavy. The treasuries look super heavy right now, right? They are just not... They cannot catch a break. I'd say that the volume has been pretty flat since about the top of the hour. So until the S&P 5, well, I guess the S&P 500 opens right now here, right? So maybe they will move lower. I was gonna say we might see a little bit of volume here as the S&P 500 goes. Are they gonna try and buy this back up? If the S&P 500 manages another like buy the dip rally sort of a thing today, then things start to get really interesting in my opinion. And there's 13 goes offer. 483. Gosh, I'm really kicking myself now for just passing on the 38. I mean, I don't have anything for me to really know that that's a good price. And it did come back a little bit. I don't know how far back it came back, below 4.8, but it did come back a little bit. The timing wouldn't have been the best, but I could have held it. Could have made it work. Wow. So because of China chip restrictions, Nvidia is down 5% today. That's pretty wild. I guess if Nvidia's play is AI learning, and China is one of the places that's investing the heaviest into it, so if you can't sell them to China, then that is a pretty big problem for your business, isn't it? Anyway, let's check Zero Hedge here again real quick. They're not going to give it to us until much later. I want to know what Goldman Sachs earnings were. I guess let's come check. Okay, so first of all, the KRE had a big sell and then buy on the open. That's interesting, but nothing too bad. So now let's come over to Goldman. And Goldman appears to be opening slightly lower, not too bad. Okay, Goldman Sachs posted third quarter profit and revenue Tuesday that exceeded analyst estimates on stronger than expected trading revenue. Earnings $5.47 a share, topping the $5.31 a share estimate from LSEG, formerly known as Refinitiv. Revenue was $11.82 billion versus $11.19 expected. Profit dropped 33% to $2.058 billion. Or $5.47 a share. Bond trading revenue fell 6% from a year earlier to $3.838 billion, but that was almost $600 more than what analysts had expected. Goldman cited strength in interest rate products and mortgages, which helped offset declines in trading of currencies, commodities, and credit. Equities trading revenue climbed 8% from a year earlier to $2.96 billion on higher activity in derivatives, topping the estimate by roughly $200 million. Investment banking revenue edged higher by 1%. Okay. Goldman shares were almost unchanged in pre-market trading. Goldman Sachs is most reliant on investment banking and trading revenue. Yeah. I would like to see Goldman find revenue streams outside of their trading, but so that's kind of interesting. I'm sure that Zero Hedge will post a story later today, and maybe we'll go into some more detail. You're long soy? Oh yeah, up 0.64% today. Those are the biggest winners: soy, silver, gold. Interestingly enough, gold and silver have not been hammered by this rise in interest rates as much. Like a week or two ago, when the interest rates were getting slammed, gold and silver were just, oh, so sad. I'm gonna look back at this and laugh. Like, we're at 483 right now. What if by the end of the day we're like 488? Like, that's totally possible in this situation, right? I'm not seeing enough flows though for me to justify trying to take a short here. I'm seeing more of a, yeah, a lot of people sold, but now it's flattening out. Well, E-mini, the first bar was green. I'm not actually seeing a ton of buying on that bar, though. I kind of think that things might turn down for the S&P 500, to be honest with you. Israel evacuating border with Lebanon. Jordan pushing for Tuesday speaker vote. If Jim Jordan doesn't make it through for speaker, then I think we're going to have some real problems in the Republican Party. Yeah, Matt Gaetz. I can kind of understand the logic in getting rid of what's his bucket? But yeah, what's the point in it if you don't actually have a... You're stuck in the hero trade? For me to want to take the hero trade, there's got to be something in that I think that's going to cause the counterflow, and in this situation, I don't see it. So I'm kind of waiting for like the hero trade to come through and then give me an opportunity to maybe go short again. Do you think market correlation strategy is working well? What do you mean by that? I would say that right now in the treasuries that correlations have been a little weak. Something that we want to keep track of, but we should realize that the markets will shift between which of these forces are the strongest, right? Now, the top story on r/politics this morning is Donald Trump willing to go to jail if that's what it takes. That comment, I gotta tell you, every time it used to be that I would be like in awe of Donald Trump's political prowess and just how good he is at this and everything. And ever since he lost in 2020, it's been the exact opposite. Everything that he says, I'm just like, what the hell, dude? That was, they had a little bit of a decent pullback and the selling is just already coming through again, man. How long have you been trading? Do you see yourself trading beyond a two-lot? Well, so I think that me trading beyond a two-lot has a lot more to do with what I think the market conditions are and where I feel like I'm at in like my own personal finances. So I think that that's a major factor behind why I stick with one. But it's also like, I really want to have success with just one, and it's kind of hard to do. So, but I don't see it happening anytime soon because of this market liquidity, man. This market liquidity is just dismal. Do you see that? They came, it's like hardly, they just make a little pullback and it's just like these guys are so aggressive, and the liquidity is not there. They're not trading more than a 2,000 lot on any of these down moves. Liquidity in the treasury market is not very good. And that makes it very difficult for me to trade. It makes it very difficult for me to trade. And you see them coming back into the 11.5, and now the iceberg shows up. And the ZB went lower. So now we're at 384. So I passed up on 40 bucks. Jeez. I've just had so much trouble these last few weeks catching every time that it's going short. I'm just find myself staring at it. I'm thinking about the question about like what your size is, because I think what people want to see is they want to see me go and start trading huge size and making tons of money and all of this sort of a thing. And like my first question on that is like, why would you care, right? I think that it just feeds into this fallacy that the way to trade is to go and find the person that's doing the best with it and then copy what they're doing. Me trading big size and making tons of money is not necessarily good for you, right? Because that just means more edge has been taken out of the market. You think that blaming the liquidity is laughable? Well, okay. Well, maybe you're not trade the treasuries over here. Well, okay, they are trading more liquidity now that they come into this 10 area. That's very interesting. The problem is that you can lose, like even on these little micros, you can lose 30 ticks just like that. It can go so quick. And you don't really get very good warning from it, right? You don't get a very good opportunity to try and deal with it and get out or try and catch it or whatever it is that you're trying to do. Well, now that I'm seeing that liquidity down there, I'm definitely not going to try and catch the edge in there. Well, I have been trading 2 lots. I started trading that was the thing, is I started trading 2 lots and I had a bit of a drawdown from it. And that was kind of when I realized I needed to scale back again, because the market conditions weren't very conducive to my trading. So if I start to feel like I have the edge and the market is conducive to what I'm doing, then I will try and size up. But at the moment, kind of just thinking about the way this has been going, I'm not too sure that that's going to happen. Might be a while at least. Another thing is that over here on the sim account, I have been trading multiple contracts. So I'm experimenting with trying to manage a longer term position, essentially. Because I think that the longer term plan here is to run sort of a CTA fund, right? And so, what I'm doing here on the DOM would be more about executing what I need to do for that CTA strategy and getting the best execution for my CTA strategy. So, I need to practice managing the multiple contracts and so forth. But yeah, I'm not too happy with the trading since August? Since the end of August? Obviously, I have not taken, and I've missed a lot of opportunity. I haven't taken advantage of this, but I'm not dissatisfied, like, overall, like, I think that that's one of these things is that people want to, you will have this tendency to slip into making your self-worth about your trading, right? And I just don't care about that. I care about trading well. I don't care about how much money I'm making from it. I already have money. When do you think is the best time for swing trading in equity? When QE is going on. When they're doing quantitative easing and just buy the dip. Yep. Will we ever see that environment again in our lifetimes? Maybe not. Maybe not. Okay. I think that auction market theory has nothing to do with fractals, and I also think that fractals have no use whatsoever. And given that we're kind of doing a little bit of a bounce like every 2 ticks, I can't see how you can be saying that any kind of bounce off of any level is like uncanny reaction. I'm not seeing that one. What I see is a pretty steady and consistent decline the whole way here, with 5 to 6 tick swings. So it's like 6 ticks down, 4 ticks up, 6 ticks down, 4 ticks up. And it's just been doing that the whole way. It's not. Can you improve it empirically? So, because the whole thing is that there's confirmation bias. Our brains have this tendency to want to see patterns. Can you prove that it's actually a pattern? And how would you do that? How would you prove that particular sort of a thing? I don't know how you do. I mean, you could go and you could develop a strategy that tries and trades off of that, but then you could go and say, okay, so like when it comes down to these certain Fibonacci levels, I take like a little counter trend trade or something. That's probably not going to work, right? So, but maybe there is a behavior where it reacts somehow to those levels. How would you prove it? How would you sit down and say there's a statistical aberration in the behavior at that level and show it? I don't know how you do that. I've never seen any work that shows that sort of a thing. And without that kind of a work, there's no way for us to know if it's actually a thing or if it's just our imagination. Or if it's just this market. It could also be just this market. But I'm not even sure I can say that you see it in this market, because again, it's just, I mean, look at the chart, man. Which level is it reacting to? You know? Well, there was this one at 17.5, but then everything after that has just been like, you know, there's a little pullback, there's a little pullback. There. Probably we're about to get one here at 09.5 again. There was another 10 ticks. I'm not interested in looking at a chart and saying, well, it seems like this sort of thing has been happening, or it seems like I'm watching the flows and I'll describe what has happened with the flows and what we think might happen with the flows based on the informational content that we have. But like this data snooping pattern sort of stuff, it's just, I have no interest in it whatsoever. That was a big trade at 09.5. I could take the trade right here, and that would definitely make it pull back, right? Found a video on cross instruments? I'm not sure. He had a new video. I must, you know, I didn't feel like there was anything really new in his newest video, but it was still good. Classic John Grady stuff. It was still good. That drop from like 14.5 to 10, they really dropped the delta on that. That was like another 20k contracts. Interesting. So basically what I'm coming to here now is we're starting to get to some of the points where like I've never seen moves like this. Like, is it possible for the market to go another 20k before we leave today? That would be insane. That would be one of the strongest sells I've ever seen. Because usually, when you get into the 40k to 100k over the whole day, those are like the outlier trend days, right? So for us to be getting already to minus 40k since the news is a really strong sell. And we're definitely in an unhinged market, right? Like our kind of timing edge where we wait for the market liquidity to recover before trying to get into a trade on a pullback or something like that. That's not working at all today, right? The only thing that worked is just pick a spot and sell and try and hold it. Once we start getting to those levels, it becomes a really fraught trade for me. I'm not sure I can justify trying to sell into it, even though it might just keep going. If I get in, the entire trend will stop. It could be. I do think, in all seriousness, I do think that the market reacts to what we do. 100% it does. Especially if you're getting into like the liquidity hole and that sort of nonsense. Like, it just comes back to these things like there's different kinds of distributions, right? Like there's a Pareto distribution. Success breeds more success. And so something doing well just helps it do well in the future. And so you'll end up with one player that makes all of the money at the expense of everything else, right? There are exponential ones, right? These are the sorts of things where it's like everything kind of piles on top of each other and just pushes it further and further and further. And then there's square root laws. The square root law is really interesting because square root law is like the in some respects the opposite of an exponential function, or it's the inverse of an exponential function. What it means is that even small data points end up mattering, right? Every data point matters and could potentially have a significant impact on the outcome. So yes, it's not like on average it's always going to be like this or something, but your one lot can matter and can be the determining factor in some edge case about how the market moves. And if other people are making decisions based off of what I say, on top of that, yeah, what we do does affect the market. That's why I'm really careful to like not just, this is another reason why I don't trade technicals. I don't see how you can trade technicals and be successful with it long term without doing so at the so like if you're some guru and you have this setup and all of the people that are following you try and follow that setup, right? Well, you're able to take it before them, and then you know that they're all going to be after you. So you could make money just at the expense of your audience, right? You could totally do that. But other people are going to, you get big enough, other people are going to come for it, right? Because that's the nature of the market. And if every decision matters, then that means that those sorts of small little things like technical setup can be washed out of the market really, really easily. So I don't want to take a trade if all of that stuff is potentially going to happen because of the adversarial nature of markets. Then I really have to have a strong reason to think that it's going to go in a certain direction, right? I mean, this today on the retail sales report is absolutely one of those situations. But then my problem is, which price do I take? Well, I shouldn't have worried about it. Maybe I need to stop worrying about it and just go for it, because that would have been $50. Even at the prices that I was already didn't like because I felt like it had gone too far. Right? Because I wanted 77. I put an order out at 77 and didn't get filled. And I was kind of messing around with it between 8 and 9. And then at 8, I was like, oh, okay, I don't think I should mess with that one. How many? It doesn't see. Here's why you get this reaction from me. Because you're not listening to what I'm saying. I come in and I say, here's this, and this that we know about the markets. And then what you do is you say, oh, well, it doesn't matter. I think that there's this pattern, and there's this level that matters, and there's this level that matters. And I'll go and I'll say, okay, well, we should take a scientific approach. Here, we're going to backtest all of these things. Can we prove that there's actually a behavior there? Can we prove that that's actually a trade worth taking, scientifically? And if we can't, why would we waste time with that when we have other stuff that we know is backed by science, right? There's a trillion different things. If I went and I pursued every supposed edge out there that somebody claims works, I would just spend the rest of your life just chasing after phantoms, right? If I'm going to do something, there's got to be a real reason for it. There's got to be data or, something that I can prove that I know is going to give me an edge. I can't just chase after every level that people in chat put out. And so there's a couple of you, Live Action's not the only one, but there's a couple of you that even though you've been watching for a long time, it's you're not believers. Right? It's you've ignored everything that I've said, and you still are trying to convince me to trade technical analysis. And I'm never going to do it. Do you see the issue? Technical doesn't work in futures, individual stocks on the other hand, maybe. Well, so one thing that you might get on individual stocks is because you get to choose which stock you're trading, right? You can kind of use technicals to give you a certain kind of an instrument, right? If I only want to trade a stock that something crazy is happening in, right? Then I can just look for gappers, right? Anything that gapped overnight, that means that there was significant news or something going on in the stock that's moved it, right? And then I'm going to get a certain kind of order flow when I do that, right? So that's where, yeah, technicals kind of like when you're doing a scanner, right? How are you going to pick which stock? You have to use technicals, essentially. You have to create a scanner and use technicals and look for certain technical things to decide which one to go into. You know what I mean? Well, when you take the technical old approach, it definitely does not work. Well, yeah. So like the traditional setups that you're gonna read in books and on Reddit and so forth are mostly just nonsense. Yes. But my point is still, because I'm not saying that like a technical setup can't work. I am saying that if everybody knows about it, it will stop working. So that's the first thing, is like, if you really do have a really good technical. So that's another thing, is that I feel that if it was a good technical setup, produced by somebody that really knows what they're doing, they're not going to talk about it on the stream. They might PM me and give me tips, but they're not going to say it on stream. So that's the first thing, is just seeing anything in public immediately makes me not interested in it. Unless it's empirically backed. But just like somebody on the forum saying, here's how the way that I trade and this strategy seems to work, not interested. Futures.io, somebody's journal and the observation, not interested. Unless it's been empirically backed. Because it being out in the public instantly makes it less valuable. Of the technical concepts, correlation works well. Correlation is kind of an interesting one because statistical arbitrage is a thing. Would you as a retail trader be competitive on that edge? Maybe, maybe not. I don't think that even I understand all of the math and everything about how these guys do this statistical arbitrage to determine that something's correlated enough to trade it and which price. I don't completely understand how they do that. I haven't gone down deep enough into that path to figure it out. I'm sure that it would probably take me many months of study and programming and stuff to figure it out. Complicated thing. Well, I can look at a chart and see where money is getting, quote, trapped. I can see where it happened in the past, sure, but that doesn't help me for a future trade. Right, because what you're doing is data snooping. Do you get what I mean when I say data snooping? So like, if I go and I say, okay, here are all of the different types of candlestick patterns. There's only so many different types of candlestick patterns, right? And then I can go and I can create a strategy for each one of them that says, when you see this, buy or sell it and see how far it goes within the next 5 minutes or whatever the deal is, right? And then if I backtest all of the different strategies over the past year, and then I'll say, oh, this one was the most profitable. That must mean that this is the candlestick strategy that has an edge. That's data snooping. I'm looking at past data and I'm making a decision about which strategy will be the best based on the past data, even though there's nothing to suggest that that pattern is going to continue into the future. And so this is always the problem that we run into when we're taking the perspective of, I'm just looking at the market data and I'm just looking at the chart and looking for some sort of a pattern. Because especially on the time frames that we humans work on, you're going to find a pattern, but that doesn't mean that it's going to continue to work next month. Most likely it's not. And that's why we have all of these methods, basically, that we've come up with to help fight data snooping. So what are some of those methods? Well, the first one, and I think the most important one, is that we don't just look at the data and try and come up with some pattern that we think we see in the data from that. Instead, we start from a theory. We look at the way that the market functions and what's going on, and we say, okay, because of this, because of the square root law of meta order impact, well, I should see this behavior, or it should look like this on the chart, right? And then I can go back and do the back testing and see if the data supports my theory. So that's the first and the most optimal situation. The other thing that you can do is you can do what we call a forward test. So you're going to optimize your strategy on 1 year of data, and then you're going to test or verify it on a different year of data. Or I could use 1 year to kind of, if I need to see which pattern works the best or see which values we need to have or that sort of a thing, right? And then I trade with those values for the 5 years and see if that works, for instance, right? Then I'm not falling victim to data snooping. So if I say, well, I'm looking at the chart and I can just see that it seems to do this around these levels, that's data snooping bias. So in order for me to be interested in that level or strategy or whatever it is that you're talking about, I would need to see some evidence that they've done something to deal with the data snooping bias. Like that there's a backtest over 5 years, right? And if there's not, well, I could go and I could backtest it, right? But there's so many of those out there. It would be my whole life just backtesting things. I could spend my whole life backtesting things that I see on Reddit and never find anything. Like, seriously. And meanwhile, I have like this well-backed research from people at universities and the top CTA funds in the world giving us real, true, empirically backed information about how the market behaves that's based on market microstructure that is complicated enough that I can spend the whole rest of my life studying that. Why wouldn't I focus on that instead of, that's the whole thing, because the whole problem is the problem is too big. You're talking about this huge infinite space. You don't have time to transverse across that whole space to try and find an edge. You don't. Like, you can't just start going into your backyard and digging a hole and expect to find gold, right? You should study about geology and find the sorts of things that tend to predict gold. Actually, I've been looking at this. There are some things, right? Like, there are certain types of minerals, if you see them on the surface, you're more likely to find gold. There are certain spots in rivers where you're more likely to find gold because it's heavier. So it's going to tend to get deposited in like these banks and or places where you end up with getting stagnant water. Right? Know where the gold is. And these are the sorts of things that I'm talking about is, okay, you're gonna have more success searching, trying to build the edge off of things that are empirically backed, right? You can go and you can look at the things that are empirically backed, and then you can say, well, can I take that a step further? And you can develop the skills to backtest it properly and prove a statistical aberration with it. CEO play. So I have actually. The problem is that we don't have enough data. It's so frustrating. I guess I have about a year's worth of like full data now, like saved up, because I started saving it up a year ago. And when I'm doing that, I want to be able to do it outside of NinjaTrader. Like, I want to pull it into Python. So a lot of stuff I'd have to rewrite. But for instance, the when we're seeing a highly correlated order flow, like consistent imbalance between buy and sell, that will tend to be persistent all day, sort of a thing. Okay, I wrote a strategy that attempted to take advantage of that. So when there was high autocorrelation in the trend, and there was high autocorrelation in the trend of the cumulative delta, then it would take a trade. And it was the most successful strategy I had ever backtested, but it was only on 1 year's of data. So does that one actually work? I don't know. Well, we have some reason to think, because it's based on like a proven behavior of markets, which is that there's a strong autocorrelation in the sign of orders. So what it's based on, right? Another one. You know what? I don't think I've tried programming this one. Maybe I could do this one. Although I think that I would still need the order flow. I don't know. So the other one is the whole wait 45 minutes thing, right? So if I could come in and say like, okay, there was just a strong trend down, and I could find some technical way of identifying that, right? And then I could say, here's where it stopped, and now wait 30 to 45 minutes before taking a trade, and then trade it and see what it does. And if now that might not necessarily be profitable, because I think that the problem is like, how do you know if there's going to be a second leg? You don't, right? But we should be able to identify a statistical aberration in the performance of the strategy still. Like, we should be able to say the MFE or MAE of that strategy is higher than if you just randomly select a time to trade every day, right? Then that would prove it, right? Autocorrelation? Yeah, there you go. And you know, I'm probably giving away too much here, but the way that I am determining autocorrelation is using NinjaTrader's R-squared indicator. Every strategy I've ever made, adding R-squared as a filter improves the performance of it. Actually, you know, one of the things that I haven't really done that I probably should, but it's a little bit of a big problem, is that I have a lot of little strategies that I wouldn't say are profitable. I have a couple of them that, like, well, they are profitable, but not by very much, or like the Sharpe ratio of them aren't very good, and things of that nature, right? Or like, it's not getting, you know, how do you maximize your profits that you're getting? When you do catch one, how do you make sure that you get the most out of it? And I was watching Mr. It starts with an S, I'm sorry. The guy that started Renaissance Technology, and he was saying, well, you know, when you look at it, even if you're just looking at price, which was like a key thing that he said, he was saying, well, price isn't the best thing to look at, but even if you look at price, you can find some things. But what he was saying is, like, on their own, none of them are actually really very predictive. But when you combine them all together, then you get something that can actually be very predictive. So probably what I need to do is I need to make something that's like combining like 200 different things. Maybe not 200, but a large number of factors in order for it to determine when to make a trade, and to make a fuzzy system, which is to say that based on, so I would have like, okay, a bunch of indicators that would be things that I believe give good entry points, and then a bunch of indicators that I believe give me good risk reward, right? And then based on how many of those entry point sort of signals I'm getting, I will have a point system. It says, okay, how many of these are pointing towards taking a trade now? And if it's over a certain score, then I take the trade. And I take and then I look at my measures of risk, and I say, based on those, that's how large I'm going to size it, right? And then as it's going along, I'm still going to keep a score of other things that are like, you know, exit signals, so that there's this fuzziness behind when it decides to exit, right? Because one of the issues that you can run into is, okay, X works, Y works, Z works, or there's a reason for me to believe that they work, but I test them on their own. They're just kind of okay. So maybe if I combine them all together, then I'll have a really good strategy. Or like the thing that the price action people do. So they say, well, I want to trade this like it's a break of a low, and then it breaks the structure from before the move, and then it comes back to this fair value gap, and then it goes up, right? And what you're doing is you're kind of saying, here are all of these things that I think will lead to a good trade, and I'm looking for them to all happen in sequence. And what you're actually doing is you're filtering too much, essentially. Like, you keep adding things on top of things, and all of a sudden, it's filtered so much that it almost never takes trades. And then you backtest it, and there's not enough trades for you to actually make a conclusion off of it, right? So that's why you go to the fuzzy algorithm. Is you get something where you're incorporating those things, but it's not all of these have to be green in order for it to happen, right? There's fuzziness in it. There's a bunch of them, and only some of them need to be fulfilled for me to take a trade. That's something that I haven't done. I think that if I did all of those, I would probably get something that would probably perform okay enough for me to feel confident putting money behind it. But what's this? If you want to do that, do it on ES and do it high frequency with delta and price, and you will see what looks like market orders taking advantage of it. Add Valdi and Cumulative and all possible to take short-term trades in ES. So I've been really I've kind of moved away from backtesting ES, actually. So like when I do backtests these days, I'm a lot more interested in trading like the treasuries or like one of the pure commodities like oil, gold, etc., because I feel that a lot of what happens in ES, it really is just purely random noise. I feel like that the amount of noise in ES is so much larger than other instruments that it, you know, like if I'm trying to discover an empirical stylized behavior of markets, it's going to be harder to find it in ES. If I'm going to do a backtesting on ES, it's going to need to be an empirical behavior that I think is going to be unique to ES, which would probably mean that I would want to be like comparing the futures to the index and the options or something like that, right? Which I don't think I have enough data to really do. You did Durbin Watson. I don't know what that is. What is that? Durbin Watson is a test for autocorrelation and I'll look that up. Add that to my list here about co-integration. Zero to 4. That sounds like one that we could make a simple indicator for and add. Something that used to happen at my old job was that we would have a support week. Like there'd be a whole week where you were on support and you were supposed to answer the support calls. And we had gotten so good, like our infrastructure was so good that being on support was kind of like being on vacation. I mean, if something bad happened, then it was a nightmare. But otherwise, you know, you often had a little bit of extra time to work on some of the things like clean up the monitoring and stuff. And yeah, so sometimes I would have more time to backtest things than I would do it during that time. But with this new job, I just never have the time for that stuff. And I've been working, like I've been so busy in the evenings, I haven't really had a whole lot of time to do backtesting anyways. Add on top of that I've just kind of burnt out on backtesting because it's like, well, I know that with the data that I have access to, that there's not a whole lot for me to find, right? So I don't do it as much as I used to. But then you get these things like what Jiwi is talking about, Durbin-Watson statistic. You know, I've never heard of that before. Is there? So like, let's come over here and bring this window over. That was where I was searching for Durbin-Watson. Okay, NinjaTrader app share. Nope. It's probably calculus. I've found that once you get into calculus sort of stuff, that you're a lot less likely to see retail trader indicators for it because you would have to include some outside library, and that's a mess. That's one of those things where if I was going to make one of those and put it out to you guys, I would probably need to do it on the latest version of NinjaTrader instead of the one that I'm in. By the way, that last swing up that we had was 10 ticks. So I think that I maybe could try taking trades around in here now. Although, well, I don't know. I think the best that I could do is try and sell 12. I don't know if I actually like that trade. Because I'm kind of feel that we've probably met the maximum for the day. So if I was going to take a trade, I think that it would just need to be a little scalp. What do you think the probability is that you know what you're talking about when it comes to markets? When I say something and I say this is a thing that markets do, 100%. I do not just come in and say things and speculate on something and then try and pass it off as truth like what most people do. So that's what most people do is they read something that somebody else read or that somebody else wrote about how to trade the trend or, you know, price action or whatever the deal is. And then they just trust it as a matter of faith and then try and trade off of it. Right? When I say something is true, I try to be very specific about this is what we actually do know and can be proven. So when I'm saying something like that, 100%, okay, I'm showing you something that I've seen proven with data. Like, well empirically proven data. 100%. Now, how much of the market do you know, and how predictive or useful is that going to be to you in the trading for the next market? No way to know. No way to know. Any thoughts on why we're skyrocketing in the S&P 500? So it looks to me like we are getting a shift down in the dollar again. So it seems like the dollar is just getting creamed, and the S&P 500 is rising because of that. Now, why would the dollar be falling? That I do not get. Well, so here's something else, though. Oh, that was just yeah, okay. So come over here and look at the Japanese yen. Okay, so there's this huge spike from some job owning overnight, and then this big drop right here was the retail sales number, right? So it dropped, but then look, it only dropped a little bit and back and forth from there. And then it's only been the last 15 minutes or so, which I would say correlates pretty well to this bounce that we're getting in the treasury, that it's been going up, right? So one theory is that we are in fact seeing some intervention in the Japanese yen. And so that could be sell dollars, buy yen. And that's why the yen is coming back up and the dollar is falling. That could be why. One theory. If it's not that, I'm quite perplexed. I mean, so another thing, I guess, that we could say in the S&P 500 is that it is an options expiration week. So there's probably going to be a lot of gamma and stuff pinning us to 4,400. If we were able to get meaningfully above 4,400, though, in the S&P 500, then I would start to be perplexed. Then I'd be like, what the heck is going on, right? Problem, like in poker, though, is in the long term, you may be positive there's a risk factor in between. You could blow your account waiting for the percentage TP to lay out. Yeah, totally could. You totally could. Okay, seller's cost basis in ZN right now is 19. So if we were making a play on the market makers, like, you know, completely rebalancing, then yeah, 19 is probably the spot. Although the thing I would note is that it's like a moving target, right? If we start moving up there, depending on the way that the volume does, the way that the volume moves, that could come in and it could be more like 16, right? But right now it's 19. You can't say that an intervention in the yen is a theory. Yeah, but it is a theory, right? I do not have any direct knowledge or any piece of information to suggest that there is intervention in the yen. Only that this is the kind of situation where they have intervened before, and that the way that I'm seeing it play out does look like when those situations where it happened confirmed in the past. Whether that's really what's driving it or not remains to be proven. Most likely met some resistance around the ES. I don't know. I mean, in ES, for all I know, it's just random noise, guys. Like I said, ES is, there's a lot of noise over there. It's a fact. I mean, do you have anything that says that that there is intervention currently happening right now in the yen? I'm looking for a hyperinflation play in equity. Oh, geez. I don't know if there is one. I mean, the issue with the last, okay, so here's a couple of thoughts on this, right? Because we definitely have to start thinking about it, don't we? I mean, I think that this retail sales in particular definitely puts me back into the, we need to be concerned about a second wave of inflation coming, because consumer spending is not coming back. So how would we play that? And the first issue is that if I look at when in the last one, in the last wave of inflation, what was the play? You tell me, because in equities, it kind of seems to me that in 2021 that everybody just got creamed, and that there was nowhere to hide. That the only place to hide was basically the dollar, and if you had anything in stocks, you probably lost money. There was not really a good place to hide, was there? So, the second wave of inflation, will it be different? I think so. One thing that I'm noticing, that I'm looking at right now, is that, like for instance, okay, the treasuries got creamed on this trade. Okay, here's the ZN, they got creamed. We're up a good 8 basis points since the news, right? But look at gold. I mean, gold did have some pressure, but gold is higher on the day at the moment. In fact, if I come back and you look at my market analyzer, look, silver is the best performing asset today. At a time when it seems to me like one of the concerns that should be out there is a second wave of inflation. So I'm going to say, when we call it a theory, let's not call it, this is like one of the possibilities of things that we could look at investing in if we're going to make an inflation play, could be mining stocks, right? Gold and silver. Perhaps on this next wave of inflation, the metals will behave differently, that they won't get creamed by the interest rates. I mean, that's a big risky trade, because if interest rates really start rising higher, then maybe they'd just get creamed like they did before. But we're seeing some stuff in the last week to kind of suggest that maybe something has changed there, right? The other thing that we could maybe do is, instead of looking for something as like a safe haven, we could go and we could say, what companies would be harmed the most from an inflationary wave, and go short those instead. Right? Now, in the wave that we saw before, my whole play was to go short big tech, right? And that did work. But since that time, those magnificent seven stocks have just come to dominate everything, and you can't really think of them as in the same way. So I don't think that I would go short any of the Magnificent Seven. You could maybe do a chip maker. Would going short Nvidia or AMD be a possible play there? Because, I mean, well, I don't know about now. I feel like that obviously a week ago, then it would have been a good play, because you would get, this decline because of the export bans or whatever, right? The headline that's destroying Nvidia today. And then you could just let your short ride. Yeah. But what it will do for me here, though, I think that's a little bit more fraught. So then the next thing that I would be looking at is what is the most discretionary spending stuff? So maybe Louis Vuitton could be one that we could maybe look at going short. Target, maybe. That's some of my thoughts. You know what? It was Monday yesterday, and we didn't do our investing stuff. But that's something that we should look at, right? Sorry, why don't you use what do you mean by those indicators? Are you talking about the cost basis? Because I do put the cost basis out there. You can see the lines on the chart. It seems to me like that with the SPOOs that the treasuries will go to almost to the tick. The SPOOs can go a little bit beyond them. But you can kind of see how it's like, okay, it's straight up until they get to the seller's stops, basically. And then that's when it kind of starts to struggle and starts to go a little bit more sideways. Oh my gosh, Lucas. Yeah, so go and read about that on Reddit, because the people on Reddit are so upset about YouTube doing that. So basically what happens, if you're not up with this, is that YouTube will now display a warning to you if you're watching with an ad blocker. It basically say like, we'll let you watch this video, but we're not going to let you watch any other videos after that if you don't disable your ad blocker. That blocks ads. That blocks mid-roll ads. Although I believe that the ad blocker for like Firefox still works. So you might try switching to a different browser. Don't use Chrome, essentially. There's a fix. Yeah, there's ways around it, let's say. There's ways around it. But a lot of people are getting really frustrated with the YouTube thing. Like, okay, here's my thing. Can I rant about this for a second? Because this is one of the things that irks me the most right now. Just because, you know, it affects my channel, right? I don't make enough money from the YouTube channel to make a living from it, right? Basically, everything that we get goes back into... We buy stuff to review, basically, is what's happening right now. And to build our machine learning data center that I'm making. So, but I would like to be more, you know, if I could spend my day just studying the markets and then making videos about those things, that would be the ideal situation for me. That's what I would most love to do. But you need some success on YouTube, and every time that I look at that sort of stuff, you know, what am I doing wrong? What do I need to do to get to the next level with my channel and stuff like that? And it kind of seems like that you have to sacrifice your morals to the algorithm, and I'm not going to do that. I hate it. And so there's this pervasive problem that I see with YouTube and the way that YouTube is run that just drives me crazy. And that is that they don't think about the bigger picture at all. It's all just optimize for money, optimize for money. Period. So, for instance, there's advertisements that you get on YouTube. Okay, you know, if it was advertisements for good, reputable companies and things that were like relevant to me, then that would be great. I honestly, I mean, this is so stupid, but in all seriousness, I browse Instagram primarily for the ads now. I browse Instagram to show it, to try and get it to show me what new products in like exercise equipment and the other things that it's picked up on that I'm into, to see what it shows me, and to find out like what are the new companies that are really doing advertising campaigns right now. That's why I watch Instagram. When I get on YouTube, it's like it's either not relevant or it's like a total scam. Like, how many of you guys in 2021, when, you know, like everything was going crazy, you know, and everybody was a stock trader, right? You got advertisements on YouTube that were just complete hogwash, like people advertising YouTube channels that were just complete scams, like straight up scams, or cryptocurrency stuff, or all of these sorts of things. Oh my gosh, it drives me crazy. YouTube has almost no controls on who they allow to advertise. And you try and say, like, you shouldn't be advertising this. This is a scam. They don't care. It's like, as long as they're making money and they have like a reasonable legal excuse, you know, they look the other way. And it is the same thing with the algorithm. The algorithm is optimized towards engagement, keeping people on the platform watching the videos the longest. And they don't think about the bigger picture. They don't think about, okay, is the content that we're sending to people actually the best content for them? Is this actually like the best thing for society? Because what we're doing is we're just driving everybody towards this zany nonsense. Like, it has to have a story and it has to have a twist, and so these people will just make it up. They'll make the story, and it's trite. It's trite, and I don't think it's good for people. And that's what YouTube is doing. This is like, take some responsibility, YouTube. Go change that algorithm, and factor in things other than just what makes you the most money. And I guarantee you that if you do that, that in the end, you'll actually end up making more money. Because if it's entertaining and good for you at the same time, that's where I'm going to spend my time, right? No, I don't think first last is Salim. He's somebody that's been around for a long time. Do you remember? And he's kind of been a little skeptical like this in the past. He was again one of these people that will come in and will, you know, okay, maybe I like your content or I like watching you, but they want to see how much money you've made, basically, and I'm kind of like, well, I don't care about that. No. I totally know that Salim has a lot of accounts, for sure. I just don't think that first last in particular is one of them. In fact, I'm pretty sure I can recall the last time first last being here arguing with Salim. And he just doesn't exhibit any of the tradecraft that we see. He's a different person. A different antagonist. Plus, Salim has been nice with us. Salim has been nice. And he hasn't been doing as much of that since he's been going back to school. So I really don't think that it is him. Because I feel like what you're doing is you're saying somebody's being a little bit antagonistic, so it must be Salim, and I don't think that's what's going on here. He just said that I've been nice. Well, I think that he's trying to say that as he's been on here today that he's trying to be nice, even though we don't really feel like that. But you see, I don't think that first last has enough context to kind of know what is. Like here's the thing, Uzi. This is a really weird thing, okay? Is that I am weird. I am weird, right? And you've been around long enough to build that model about how Seth behaves and so on and so forth to understand it. In a way that like most people when they first come into the channel they won't get at all. So like when they come in and like, you know, like what is the culture and the correct way to behave and stuff, things that are just going to be like second nature to you will make absolutely no sense to most other viewers. Yeah, antagonistic viewers are like channel mascots. I mean, it's great whenever it gives me an opportunity to talk about something that, you know, we can learn that will help your trading, right? Oh, Uzi thinks that first last is Salim. I suppose it's possible, but I'm just not exactly seeing the kinds of, like, the way that he talks and stuff that I believe is the way that Salim does things. How do I say it? I think first last lives in the UK. Where do you live, first last? I wish this channel had more viewers. Oh, thanks. I don't actually know if that's actually what's best for us or not, but we're just gonna roll with the punches, guys. You can tell when he switches usernames to by the delay. Okay. Okay, but like, do you get what I'm saying? Where it's like, it used to be that Salim would be here every day, right? And for a long time, we knew who he was, and, you know, we were just chatting with him, you know, and everything's good. And then he said that he was focusing more on school, and then we didn't see him as much, right? And we do see him come in every once in a while, and there has been a few alt accounts that I think we've seen where we're like, I think that was probably Celine, right? But I don't think that that's first last. Oh, you lost your funded account? Really? Okay, so wait. What happened? Like, okay, so what is it that we would need to know? Okay, well, so the question was, how long did it take? Was the first, the key one. So he started in March. He was still funded, but underwater in August. Okay. Lost count 10/17. I mean, so first thing is, having kept it for 7 months, you should be proud of it. Should be proud of that, right? Last week of last month. Oh, okay, so let's say 9. Where are we on the 17th? 9/29. Like, I think that is above average, right? But then the other key thing is that it wasn't for you. It wasn't just one big loser, was it? It was kind of a slow and steady death. Oh. No, not really. It's not something to be proud of. I'm in this biz to make money, not to hold accounts while paying for data fees. No, I'm not going to ban Luke first last. You haven't done anything wrong. You notice I'm probably way too liberal about this sort of stuff, right? You're doing another eval. I think that if the only thing that matters to you is making money from trading, that you're probably better off like trying to start a CTA business or something like that. You know? Maybe I'm wrong. Maybe I'm just projecting because it seems to me like that's a place where, you know, that's kind of where you start being a professional. But and swinging it, you know, that's another thing. It's like maybe not day trade, maybe swing trade. Well, that is the bottom line, but that is definitely not the thought process while trading. It shouldn't be. Yeah. Well, okay, because like from my approach, right, I care the most about getting as good at trading and understanding the market as much as possible. You know, now to me, making money is a tool, right? The fact that you can make money from it is the thing that provides incentive and feedback about how well you're doing with that particular thing, right? But because I understand how difficult the challenge is and how stacked the deck is against me, I'm not going to lose any sleep over it, or at least I've learned to not lose any sleep over it if I'm not making money from it, right? Because whether I make money on it or not is not a reflection of really anything other than that the decisions I made during that time period did not result in profitability. And that's all that it means, right? Doesn't change what the empirically proven behavior of markets is, for instance. And, you know, the market changes all the time. So I think that's one of the things that people do is you attach your, what do we call this? Your who you are, your identity. Sorry. You attach your identity to your profitable strategy. And then when that strategy is no longer profitable, like that destroys your identity, right? And so I've learned to separate that out completely. What is my identity actually? That I want to know as much about the markets as possible. And trading, day trading is just a tool that allows me to have that kind of insight and helps me accomplish that goal. But the making the money is not necessarily the end goal, because that's not always going to happen. And if that's not happening, then what are you doing, right? Like how much, if all that matters is how much money you've made from it, well, at what point do you sit down and say, I'm not going to do it? Like, it seems like I'm not good at this. I should give up, etc., etc., etc. You know, what is the level? You have an amount of money. I'm willing to blow $100,000 on trading before I give up. Is, you know, sort of like their approach, right? But I don't think that you would do that, Lucas. I don't think that there's probably no amount of loss, struggle whatsoever that would probably stop you from trying to scalp, right? Which says to me that actually it's something else driving you as well. Great sim, when you're confident, fund yourself. Well, that's true. Knowing and doing are two separate things. Anyways. Yeah, well, I think that Lucas is a great trader. At least a lot of the things that I've gotten from him are really great. The thing that always bothered me before was he's trying to focus almost purely on the technical. He's trying to like real Gary Norton style scalp. And I really think that to be competitive as a retail trader, that you need to go a little bit higher level than that. Like, the things that you know with scalping are very valuable and will help you, but you also, you know, you want to have those predictors of order flow, essentially, right? Which, that's why whenever I'm struggling, I spend more time reading. That's what I do. Is I try and read the news more. I try and get into deeper stuff to try and, you know, find what it is that I'm missing about this current market that's going to give me that edge. Is how I take it. It's been kind of frustrating, you know, because here are all the things you know about the market, statistics, probability, and trading overall. You can't make money. Meanwhile, these dickheads reading a chart make more than, well, but that's not true, right? Like these dickheads reading a chart, you know, they're blowing up sooner than you are, right? Like, they'll get the account and within 3 months they'll blow it, is usually what happens. I know you use Financial Juice, but what are the other sites you focus on? Well, I really try and read Zero Hedge. Anytime that they have like their members only posts, those are ones, there's real edge in that stuff, man. But it's not Zero Hedge itself. I honestly, the stuff that you know, the posts that are like Tyler Durden wrote, I usually think that those are nonsense. But it's the stuff that came from like analysts at Goldman Sachs, etc., that I'm trying to read. So that's one of the primary places that I go. Yeah, but I think some of them are gaming these funded accounts, like having several stack up. They blow a lot of them, and I've seen that too. For Zero Hedge is brave. See, that's the sort of thing. I don't think that Salim knows enough about Zero Hedge or visits that website enough to make a funny comment about Zero Hedge, for instance. Right? Nor would he make it like a political joke like that. I don't know, man. So the thing is I've seen people doing this and I've seen people talking about it, right? But we don't have the ability to look at like all the people that are saying that and like all of the performance that they've had, and over the long enough period of time, what happens, you know? No, I never took a trade. I really should have. I feel really stupid about it, to be honest. You know what's interesting though is at least in the 30 year, this is coming back really hard, actually. It's actually flattening out a ton, which is, I don't know. I don't know what that means. Should I be concerned about that? On a long enough timeline, the survival rate for everyone drops to 0. Anyways, the one thing that we do know though is like we have gotten some statistics from these funded account firms, right? And you know, they're not good. and we've got to be really cautious about the risk taking side of it. But that's something that we should maybe do, right? Think about it from a martingale perspective. You're only risking the evaluation cost plus the data fees, but the upside is quite huge in comparison. So if you martingale, you should come. Yeah. I mean, it is something worth considering. So here's one of the things that I find really weird is that you can definitely make money in the short term from taking on a lot of risk. But every time that I try to do something like that, it doesn't work. I've never done it too seriously with discretionary trading, but I've done it in back tests, and there was only 2 or 3 that having that skewed risk reward really helped the strategy anyways. So I guess I haven't done a very good job at finding like a really good skew on something. I don't know. But because remember I did that one where there was a sponsored run, and I did that one where it was kind of a little bit of a YOLO, and it was like totally working until like the last trade. Right? And it was kind of funny because that just happened to be the 1 month all year where it's shifted. Why did you comment? I don't know. Are you sure that it didn't just show up in all chat instead of... Maybe you put a link or you used a word that YouTube didn't like. Anyways, I think there is something to be said about coming up with a really risky strategy and trading it on a funded account. And then I think we should do more of that, and I just haven't come across the right idea to try it with, you know? Well, I don't think that you can necessarily martingale it, because you do still have to keep your max loss below, you know, $1,000 in a day or something like that. You think that they're straight up martingaling it though? Because like martingaling to me is like, I take the trade, it doesn't work, so the next time I trade it with 2 contracts, and then the next time I trade it with 3 contracts, right? And you reach your max too quickly. So instead, what it has to be is my stop is really, really big, right? Just double down until it works or go bust. Oh, well, okay, so here's the other thing. For me to do it, or what I would be interested in doing right now, it would need to be one that doesn't force you to close positions at the end of the day. Is there one that lets you swing? If I was going to do that kind of risk play, I would want to swing trade them. Because I've had success at least this past year of testing this, right? I'm starting to feel more confident about my long-term read of the treasury market. Like just right here, right now. Like, I don't know what happens if you buy 4.8, but I'm going to bet you, I would be willing to bet money if I could, that I could. I'm just not willing to do it here at this spot. But I'm willing to bet you that interest rates go higher at some point this year. Or let's say within the next year, I think that at some point interest rates will be higher than 4.82. I can almost guarantee it, right? So if I had something that allowed me to swing trade and I go in and I trade the micro contracts to keep myself like well underneath of their requirements and everything, and all you got to do is catch like one or two amazing ones, and then the rest of it is just trade little ones, right? Like, that's the way that I think I would want to take the risk. But then once you get to that level, then it's like, well, why don't you just swing trade with micros on your own account? Which is probably what I should do. The smart dudes are doing it on micros since you can trade up to 10 of them. Oh, really? Well, I mean, having that ability to change your size is really matters. I need more data on, like, how should I size? You know what I mean? Like, it's time for me to go, 9 o'clock, but we've talked about a lot of stuff about backtesting, and I don't know why, but for some reason it's kind of brought up to my mind the things that I knew were deficiencies in the backtesting that I hadn't tried yet. Like, for instance, I hadn't tried one that was like a fuzzy or that was large enough. But one of the other things that I haven't done is I've never really tried messing around with a strategy that adjusts its risk. It's always just one contract in and out. And that was because I'm trying to find a predictive edge. But maybe you can come in and you can say, well, I'm willing to trade this one with larger size because of these factors, and change the size that I'm trading based on what's going on, right? That's and if I'm going to swing trade, that's really kind of what I think you want to do, right? Is because the way that I've always done the swings is like, okay, here's where I want to initiate it. I initiate it with more contracts than I intend on holding, so that I can take some sequential profits on a few of those contracts to give myself a little bit more room to try and let that ride. So I've never incorporated that into a strategy. I'm not quite sure how I would want to do it, other than just based on what volatility is. Could look at current volatility and adjust based off of that is one thing. Thoughts. I'll try. I'll try looking at it a little harder this week, though, Lucas. For you, just for you. You've been around for such a long time, and I don't know. I know that it's like, well, at the end of the day, I didn't make money, but you are doing way better than most people. I tell you that. What they do is they have two evals. They're long one count and short the other one before a big and one will pass. Yeah, totally sure that some people are doing that. But then once you get funded, then yeah, as it's like, and then you keep doing that, and eventually you blow the account, right? But this is the other thing is that I don't know, when it seemed like when I was trying to like actually, there used to be that I would be like, okay, this is what I think is going to happen, and I would take a trade just before the news, right? And then I kind of stopped doing that because I had enough of them that where it was like a loser that it would like made me feel so stupid that I didn't do it, right? But I've done a pretty okay job at guessing some of these lately. So maybe I have a better edge on predicting the economic numbers than I thought. And I should be trying to track the performance of it to really see what to see if I can, get some data about if I really do actually have an edge on that or not. Because maybe it's all in my head, They usually fail once they get funded. I've definitely seen some people doing some insanely risky stuff, man. That's for sure. How long they last, I don't know. There's been at least 2 trolls in the past year that I've argued with on Reddit that I should go and check up on and see if they're still still trading. Okay, guys. I will see you tomorrow. I'm Well, I'm going to be like starting my fast tomorrow because I have a colonoscopy on Thursdays. So I don't know if I'll take trades tomorrow. I guess we might have some news and I'd be able to do stuff at the beginning. So we'll see. Does look like this one is coming back. So I don't feel so terrible about missing out on taking 4-8. So I'll see you guys tomorrow. Stay excellent.